Okay. Good evening, everyone. My name is Shankaran Raghunathan. Let me briefly introduce myself. All these things that your batchmate told you was all the formal introduction. I like to highlight a few things that I'm proud of and which may be relevant for today's seminar, okay, or sharing of my experiences. I've been an entrepreneur most of my life. I love entrepreneurship. In fact, the student store at XLRI was started by me in 1983. We named it the Cellar. So we bought it from our seniors for 3,000 rupees and we sold it to our juniors for 3,000. But in the 1 year that we ran the store, we made more than 3,000 rupees at that time, which may seem very little now, but it was quite a lot at that time. Because my entire 2 years of my XLRI, including train trips and stamps on letters home and trips to Darjeeling and so on, cost me a total of 15,500. That's it. 2 years at XLRI, 15,500 compared to what you guys are now paying. I heard it's about 32 lakhs for tuition allowed and then all other things. So whoever is very quick in math can perhaps tell me what this inflation rate is. The cost of education at XLRI in the last 40 years from 15,500 to 32 lakhs is an annual increase of 13% per year. Okay, that's the annual growth rate. So that's how expensive XLRI has become. But anyway, that's a different matter. So I graduated from Excel, worked in the IT industry, went on to do my PhD, but my entrepreneurial bug was very much there. So I started a software company with 8 other Excelers. And I'm proud to say we were the first company on XLRI campus to give an international offer. Okay, and this was in the 90s. We gave the first international offer by any company in XLRI. And slightly moving forward, I spent my time in the US, came back to India around 2000, and I was the one who took XLRI online, the XAT exam. I named it XAT, and the admissions process went online first because the online exam could not be held due to some last-minute hitches. But I took XLRI admissions online. At that time in 2001, about 16,000 students applied to XLRI. In 2 years that I started managing, and before I handed over back to XLRI, 1.2 lakh applications came. Okay, so that was the power of XAT online. And I did various other things, but the last thing that I'm proud of, which unfortunately could not. Can you please mute? Is it for me? Or can you please mute? Okay. So one of the recent things that I did, I'm very proud of, but it didn't fructify, as I was saying, was I, along with a few others, some of them excellers, we made the bid in 2019 to revive Jet Airways. As you know, Jet Airways went bankrupt and shut operations in April of 2019. And I put together a proposal for the revival. Unfortunately, it was not accepted by State Bank of India, but mine was the only proposal at that time, which promised to give back every single creditor, every single paisa owed by Jet Airways. But still, State Bank of India rejected the proposal. Yeah, go ahead, please. Okay. Am I audible?
Yes, please.
Am I audible?
फाउल में तो 2 ही होती है, एक होता है यहाँ पे, तो फिर वो क्या रहेगा फाउल का फायदा क्या? अपनी सोच एक रखनी होती है, हाँ उसके साथ एक दूसरे को टर्न एक्स्ट्रा चल पे सेफ रखनी होती है, टर्न मनी एक्स्ट्रा होती है.
Can you all mute yourself, please?
पहला फाउल तो 5 होता है, भगवान का होता है, हम लोग करते हैं पहला फाउल बंदे को ऐसा अलाउड है.
Can you all mute, please?
ये मुंबई के एक साल पहले की सिंगल है मैंने कंटिजेंट में भी नहीं खेलने दिया था लोगों को
तू था इसमें?
Sagnik, can you mute yourself?
इसमें था। अच्छा
Sagnik,
फोर वन का कंटिजेंट मतलब टाइम में कोड दिया था कि कोई के हाथ तो मैं
Can you all mute, please? Okay. So, as I was saying, we gave the proposal to revive Jet Airways, and in the whole tension, the stress level grew so much that I had a stroke trying to handle all this. But anyway, 2020, the pandemic came, and I decided all the things that I was doing earlier is FOR. Can you please mute?
So can you please share the co-host access to me? I'll mute all the other people in the
I'm
meeting.
trying to see how I can. I'm trying to see how I can.
करवा दिया
Okay, I'll mute everyone, okay?
Yes, sir.
Okay, all right. So let me continue the recording. So all that I did prior to 2020 is FORMER, farmer. And now I'm a full-time organic farmer, FARMER. In the last 4.5 years, I've derived enormous pleasure in not only managing my own wealth, but also helping others get rich. When I say I help others get rich, I teach people how to manage their own financial fitness. So that's what I do, and hence the title of this today's talk is Ecstasy in the Financial Universe that I am experiencing, and I hope that I can get you all to think about getting high on the financial universe. Okay, so given that a brief about me, let me jump into what I wanted to share in the next few minutes that we have. I hope to leave enough time for all of you to ask me questions, because that's the best way to understand what to do. Okay, let me move here. Okay, so the whole idea is you need to become financially fit, and that's how the whole conversation started with your investment club. So I say if you do your physical fitness regime, you need to handle your own physical fitness. You cannot outsource it to your personal financial trainer. You need to do it. At worst or at best, what the physical trainer will do is to stand in front of you and count 1 through 10 and make you do the exercises and feel the pain. And he makes the money, or she makes the money for counting 1 through 10. But you cannot outsource your physical fitness. Similarly, you need to handle your own financial fitness. There's no other way. You cannot give it to mutual funds and hope that they will take care of your financial fitness. And it's very easy to manage your own financial fitness, as you will see in the rest of the slides that I have, okay? So you can have a personal financial fitness trainer or have a training partner to go through this entire journey of being financially fit right through your life. It does not take more than 1 hour per week. Maximum is 1 hour per week. And even if you're working 90 hours per week, as some senior managers these days seem to suggest, you can still set aside 1 hour per week to manage your financial fitness. And in the process, enjoy the whole process of being financially fit. So I made these 30-year tertiles, 3 groups of 30 years. So age 0 to 30 is when you're learning to earn. And you are in that last phase, perhaps most of you are in the last phase of the first tertile, where you're about to graduate from XLRI. You may have worked before, but after XLRI, you're going to start a steep inflection and how you start earning. Okay. And then you have the second period, second tertile of 30 to 60 years, when you have started earning, you're working for money, you're saving smartly and investing, hopefully. And this is a period of excitement. And I'll talk about all the things that you'll go through between 30 to 60. And then you have the 60 and beyond, when you need to make your money work for you, rather than you continuing to have to work for money. So that's the wonderful golden period when you will enjoy all the things that you want to do. Okay. So if you take care of your health and wealth in the second tertile between 30 and 60 years of age, 30 long years, then you'll wonderfully enjoy your life after 60. And that's the whole idea, that you don't have to keep working yourself to death. Okay. So this is the best period, 30 to 60. Now you're going to graduate, you're going to start a career, you will do the MBA. You know what this MBA is? Not what you're doing, but the most beautiful alliance that you will find during this campus or outside the campus. You will start your own family, take charge of your parents, and build your home. Children will grow. You'll put them to college. You'll become grandparents. This is a fantastic 30-year period, and it will run like crazy. Before you know it, these 30 years will be gone. Okay, so try to cherish every moment of this 30-year period. And if you can, avoid all the triumvirate, the BSC, okay, BP, sugar, cholesterol, all these things that you will gather along the way, and hopefully you can avoid if you manage your physical fitness, okay? So the whole idea is to eat well, sleep well, and enjoy your work. So if you don't build your stress, you're going to enjoy this period very well. So the idea is not to build this BSC, okay? And this is the time when you're going to earn the most. You'll also be spending the most during the time, but this, my suggestion and my experience is, set aside at least 10% of your annual earnings to start saving and investing. And that's what I'm going to be talking about going forward. Okay, so the power of compounding. If you set aside, okay, 10% of your earnings. So let's assume in the first year of after your graduation from XLRI, you make about 12 lakhs to start with. Maybe you will make more, but you should make at least 12 lakhs for all that you guys have learned in XLRI, okay? So if you make 12 lakhs in the first year, and you set aside 1.2 lakhs, if you invest it wisely, you'll make at least 10% per year, or you can maybe move to 15% as well. And I teach people how to make 30% a year, okay? So every year you start setting aside 10% for investment. I've just put a 15-year period here because the Excel slide, I didn't know how to put all 30 years, okay? So next year, let's say your salary goes up to 18 lakhs. Third year, it goes to 24, and maybe you stagnate for a few years before you start getting to the 36 lakh bracket, 60 lakh bracket, and so on. So 10%, you assume you're not making. You're only making 90% of that. So don't spend everything. Keep aside 10%. And if you invest wisely, it will start growing. Even at 10% per annum, if this grows, at the end of 15 years, this investment that you've done will be worth 4.75 crores. But if you're making 15%, okay, look at this. If you learn how to make 15%, it will be 38 crores in 15 years. That is the power of compounding, and you can do it. Okay, it's very easy if you set your mind to doing it. So you're never too young to start. I started in 1986, 28 years young at that time, and I got some extra fee that my client gave me when I was a consultant. I didn't anticipate this 15,000 rupees that I got extra from my client. And what did I do? The only company that I knew at that time was Tata Steel, because 2 years of XLRI, we were exposed and overexposed to Tata Steel. At that time, it was called TISCO, Tata Iron and Steel Company. So I said, let me buy the shares of Tata Iron and Steel Company, TISCO. Those days, there was no online investment. So I had to go to a broker, and I'm in Chennai. So I walked up to a broker's office that our family knew, and gave him the 15,000. And I said, buy Tata's TISCO shares for me. And he got the Tisco shares, and after about a month or so, I got the physical paper shares, which I kept on for a very long time before all this demat and other things came. So, was it a good investment? Absolutely not. Okay, I should not have invested in Tata Steel, but that's a different story. And we will talk about how to invest, or how do you find a good investment opportunity. So that we'll talk about today. Okay, so I started in '86. I went off then to the US, and while in the US, I started investing around September, October 1986. And after 1 year, I came to India for a vacation and went back. Boom, Black Monday came in 1987, October. The first real shock that I experienced in the stock market was around 1987. And since then, several crashes have come in the market, but the market kept bouncing back and growing. So I understood the power of managing this volatility. If you can manage volatility in anything, whether it's in your life or financial world or anything, that's the best thing that you can learn to do, because you will come out successful. You will come out stronger. Okay, so it's important that you know how to manage volatility, and especially if you're investing in the stock market, which is full of volatility. Any stock you take, there's nothing like a very docile stock. Okay, so you need to learn how to manage this volatility, and that's one of the things you will see that you can easily learn. I'll show you that. So as soon as you get your first job after graduation, get this financial fitness journey started. That's the best thing that you're going to do for yourself. Put aside 10%, thinking that you only made 90%, so that you can start preparing for your future without in any way compromising on the percent. But setting aside money is just savings. Okay, so savings is not what I'm going to talk about. I'm going to talk about how to take the money that you've saved and invest in an asset which increases in its value over a period of time, while also generating income for you. So that is the key. You need to invest in assets. And investing in financial assets is what I'm focusing on for this 2 hours. Okay, so it's as you will see, it's one of the best investment asset classes. So learn to invest in financial assets. Okay, and it's not difficult at all. You don't need to be a finance wizard. You don't need to be a finance major in Excel. When I was doing my Excel, I did my HR, and there were some professors who always had a different view of HR students, thinking that HR students were not mathematically savvy or inclined. But that's not the case. Okay, anybody can be a wizard in the financial market. It doesn't take an MBA in finance to do it. In fact, most MBAs in finances don't do a good job of investment. Okay, direct equity. That is what I focus on. I do not do mutual funds, portfolio management services, real estate, and gold. I used to do mutual funds before. Now all my assets are in direct equity. Okay, that's the best so far, and the best is yet to come. Okay, so till then, I'll focus only on direct equity, where I identify good stocks and I invest. I keep saying invest and not saying trading. I am not a trader, and I'll explain all that going forward. Okay, so what to invest and when to invest are the two questions. That's a universal question that everybody has in any market. Okay, so what stocks to buy? That is part of the fundamental analysis, which can take at least a good 4 hours at least to learn. Of course, there's a lot to learn in fundamental analysis, but to begin your journey of investing in the stock market, a 4-hour exposition on fundamental analysis will get you started very well. Okay, and then once you've identified the stocks to buy or invest in, when to buy or when to sell what you buy is all dictated by technical analysis, and which will take a long learning. Okay, so the bulk of the learning is technical analysis, trying to understand the behavior of stock market and the behavior of the prices of each of the stocks that you focus on. And that technical analysis will take you maybe about 36 hours to learn. And once you learn those techniques in about 36 hours, you can comfortably make 30% a year. There's no guarantee, but whatever I'm doing is what I'm sharing with you, and whatever I've learned in handling technical analysis and how I apply it is what I teach in my seminars. Okay, but this is not a sales pitch, so don't get me wrong. All I'm telling you is wherever you want to learn, go ahead and learn technical analysis before you start investing. Do not invest your money in the stock market unless you've learned and trained yourself on how to invest. Okay. So I kept saying investment, not trading. So a lot of people would like to know about day trading. Okay. Now, I did my research, given the fact that I'm a researcher by inclination. I took 30 years of data for more than 30 stocks. And I did a back testing where I bought the stock at the opening price and sold the stock at the closing price on the same day. Day trading, I buy in the morning, sell in the evening. And consistently, if I do this over these 30 stocks over 30 years, the maximum return I could make is only 15% per year. So day trading, in my view, does not pay. It gives you a paltry 15%. And it gets you hooked. We don't want to get hooked, okay? Then the question is daily trading. I buy at today's opening price at 9:15 in the market. I buy whatever price is offered, and I don't sell today. I sell tomorrow at the closing price at 3:30. If I do this consistently, very objectively, without emotion, I buy today and sell tomorrow at close, I make 16% per annum. That is what the data is telling us. Then I modify that into strategy 3. I buy in the morning today at opening price, and I will sell only if the price is above at the end of the day or tomorrow or the day after. I will not sell at a loss. So if I follow this approach, I don't sell during the day. I buy in the morning at the open, and if, at the end of the day, if the price is higher, I'll close it. If it is not, I'll wait for the next day. And whenever it is higher, that's when I sell, and then I rebuy. I keep doing this for 30 years. The maximum return I can make is 24%. Okay. So clearly, the short-term trading does not pay, and it gets you hooked, and that's not what we want to do. We want to enjoy life. We don't want the stock market investment to dictate our life. Okay. So investment is for us to do what other things we want to do in life. So what is the purpose of investment? What is your purpose of investment? You need to be clear with that. And once this is clear for you, everything will fall in place. So for me, at least, okay, a purpose of investment, the first one is to get regular income. I want to get regular income. Right now, this is my source of income. And whatever I want to do, I do organic farming. You know, I don't make money in organic farming. And the returns on the investment is what is taking me forward. So I want to get regular income without depleting my wealth. So I want the portfolio value to keep increasing as well. So these are the two purposes that I use. But you may come up with something else, but be clear about what your purpose is for investment, and accordingly work out your strategy. Okay. So in doing so, a lot of people say, I'm a long-term investor, I'm a short-term investor. They think as if short-term investor is not a good thing to be, versus long-term is a virtuous thing to be. There's nothing like that. There's nothing like long-term. In the long term, as some economists said, we're all dead. So I think long-term is just an aggregation of several short terms. So if we live well today, we live well tomorrow. So every day is a wonderful day to experience. And I experience now, today, and only then I am there for tomorrow or the next hour. So to me, aggregation of short terms is what makes the long term, which means I need to look at my investment in the short term as well. I cannot invest and forget, okay? So to me, day trading does not pay. We saw that, okay? We saw how the investment returns have been very low, okay? So look at this NASDAQ. This is the price chart of NASDAQ. You see how in 1991 or so, it is here on the left corner. It's about about 400 or 200 at that time, and then over a period of time till about 23, it's come to the right top corner. Okay, so this is how most companies' stock prices also do. They start on the left corner and go up. So because the universe is expanding. As the universe is expanding, everything in the universe is also expanding. As the stock market is a microcosm of the overall universe we are all in. So the financial universe reflects that. So as the universe is getting hot and it's expanding, the financial markets also go from the bottom left to the top right. Okay, I can bet you there is no such stock whose price chart goes from the top left to the bottom right, always. Okay, they might go down like that temporarily, but over a period of 30, 40, 50 years, the stock prices seem to be going from the left bottom to the right top. That means prices are eventually going up. So if you are a born optimist, there's nothing wrong with it. You are reflecting the universe. Okay, so you can be a born optimist, and that's what the universe is all about. And that's how we enjoy the universe. That's why I call it the ecstasy. Okay, I really experience the joy of interacting in the financial universe, which I hope you guys will learn to do as well. But coming back to this chart, you see how if we had invested long back, in 30 years back in NASDAQ, or for that matter, any stock, okay, and we wake up after 30 years, it has gone up to 14, 15,000, okay? Which is what the data is. June 20th, 1991, it was $486. June 18th, 2021 is $14,000. Okay. So if you had bought, or if I had bought in 1991, and in 21, I would have got $14,000. Right? So what is this rate of return per year? What matters is how much am I getting every year over these 30 years? Okay, and you will realize it's a measly 12%. The IRR, if you use this data and you put a XIRR function in Excel, you will get 12%, 11.9%. Okay, so this approach of investing and keeping quiet and waking up after 30 years is called a coffee can approach. Some financial advisors, advise this strategy. I will not. A coffee can approach to me is a stale approach. It becomes stale after some time. It does not give you more than 12%. And I've done this analysis over multiple stocks. Okay, so we cannot afford to put our money and wait, because you see in the Fortune 500, you look at the list of companies 10 years back, and you look at the companies now in the Fortune 500. Several of them don't even exist. They vanished. So we cannot afford to put our money in a company and wait for 30 years, because in between companies would go bust, like Jet Airways did in 2019, okay, after being one of the most successful companies. I don't know why this red line is coming. Okay. If any of you have questions, you can ask me. Maybe this is your way of asking. If you have any questions, please put up your hand. I'll see, and I'll let you ask your questions, okay? So churning is what gets you the butter. You have to buy low and sell high. So if you're traveling on the highway, you need to learn how to watch for signals, indicators, and patterns. And the Indian highways are different from the American highways and so on, but generally they're all highways. And most of them use the signals universally. But in India, of course, the truck fellow will turn on his indicator on his right, and you would think he wants to move right, but he's actually telling you that you can pass him on the right side, right? So it can be a bit confusing when you deal with one market and the other, but generally signals, indicators, and patterns tell you how to handle your investments in the market, when to buy and when to sell and what to do. And different regulators, the Indian SEBI and the stock exchange regulatory authorities may have different things that you need to learn here when you invest, as opposed to what the US market does. But otherwise, most of them are universal. Okay, so if you learn how to invest in India, you know how to invest in American stocks as well. Okay. So look at this NASDAQ over the years. The same NASDAQ, instead of putting money at 486 and waking up 30 years later to get 14,000, you could have done 7 round trips in 30 years. Okay, you bought at 486 on June 20th, March 31st, 2000. After about 10 years, you sell for 4,572. With that 4,572, you go and buy in October 31st, 22 for 1,329 when the prices come down. So you sell high, and now you're buying low. And you do this 7 round trips over 30 years. Your IRR is now 26.5%. So as of June 1821, if you take this time period and all the cash flow that we have made, you make 26.5%. You started with the same 486. In the earlier case, you made 12%. Now, because you went back and forth, you churned. Okay, the butter is now 26.5%. But look at the other thing, which is much more dramatic. Okay, so in the coffee can approach, you invested 486 and you got at the end of 30 years $14,000. The gain is 13,544. But look at this here. Because you did 7 round trips, you bought at 486, you sold at 4,572. You used that money and you bought 3.4 shares at 1,329 being the price. You invested the same 4,500 and you got 3.4 shares, which you sold after 2 years at 2,066 and you made $7,000, which you invested back in 2004 August, 3.8 shares for 1,800 a piece, and you gave up 6,900 out of this, which you sold at 2,600. And then comes beautifully how the market increases in value. By the end of June 21, you are $119,000. $486 you started with. You didn't bring in any additional money at all, except what you made in the market. You end up with $120,000 versus $14,000. So irrespective of the fact that the IRR has now moved from 12 to 26%, your gain is a phenomenal amount of $118,000. And this is the power of knowing how to invest. Okay. And to know how to invest, you need to know where the price is going. Where is this price going? Okay. How do you know it will stop here and start coming down? How do you know it is not going to go below 1,329 and start going back up? To give an example, during the pandemic in 2020, from January 2020, the market was giving warnings to investors that something is happening. We were not serious about COVID in India at that time in January of 2020. Nobody really talked about it. But it had already started affecting people in the US and China. And the stock market in India was showing jitters. The tremors of the quake that was to come was very clear in January and early February. By early March, by about 3rd of March, things became even clearer that the quake was supposed to come and the tremors became much stronger. I exited completely. I sold off completely and came into cash by the 10th of March. Okay. 10th of March, all planes were still flying in India. There was no question of lockdown, nothing. Then 16th of March, lockdown was announced. Okay. The market crashed like crazy. Okay. Market really crashed. And it kept on going down as if there's no tomorrow. But March 24th, 2020, almost all the markets around the world started recovering because governments took decisive action. From March 24th of 2020, the stocks started rising back up again. So I had already liquidated everything on March 10th. Now, if I started buying from March 24th, okay, imagine the money that I made, okay, which is what I did, okay. But to know when it will stop, okay, sorry, where the price is going, I need to be able to forecast the price and the time by when this will happen. These are very strong tools called Fibonacci analysis and Elliott wave analysis, which are advanced technical analysis tools, okay. So we use these kinds of technical analysis tools to forecast the price. Your finance professor in Excel might tell you that the stock market cannot be predicted. It is a random walk. That is not true in the world of practice. In the world of practice, what matters are not the theories that are propounded in ivory towers like Chicago and Berkeley. The models that work in the real world are the models that were given to us by people who are either in prison serving time for a white-collar crime, or people who are in deathbeds who seem to have a vision about stock market behavior. So these Fibonacci levels were propounded by a guy who was in prison. Elliott wave, Ralph Elliott was in his deathbed when he came up with this thing about how the stock market price behavior reflects the waves, and he came up with a wave theory. Okay, so while your finance courses are good, in order for you to be successful in the investment market, you need to learn a few things other than what finance theory would tell you. Okay. Oops, sorry. So I don't adopt the coffee can approach. I buy and sell. Just because I buy and sell doesn't make me a trader, does not make me a day trader or whatever. Yes, I focus on the short term. I focus every month. I do look at my investments and review once a week. I spend that 1 to 2 hours every month to check how my portfolio is doing. Okay. And that's part of the financial fitness exercise we all need to do. Okay. So I do a lot of technical analysis, which I've learned for a period of time, and it's important for you folks to learn how to do all these things. Training is important, okay? And I also manage options, because to me, options is a way to manage the risk of investment in the market. Options is not an asset by itself to buy and sell. I'm not an option trader. I use options, of course. I do buy and sell options. I sell options more than I buy options. And that helps me to manage the risk, which means it helps to make my gains very certain. Okay, when I invest in the market, I don't know whether the price is going to go up or go down. And if that is the case, how do I make sure my gains are certain? I use options as a tool for that. Okay. So financial freedom is right here, right now for you guys, okay? So take charge of your financial health right now, okay? And to do that, you need to be trained. In the US, a barber cannot cut hair till he or she has undergone 1,500 hours of training and get certified, and they're licensed to touch your hair. And if you want to become a pilot, you need to train for more than 250 hours to get a commercial pilot license, so you can sit on the right side of a commercial plane and be the first pilot. Okay. But if you want to invest your hard-earned money, there is no such requirement in the country, not only here, anywhere. And people lose a lot of money because they don't know how to invest. So do spend some time and learn and get trained to invest. And if you do so, you're going to feel the ecstasy that I am experiencing, and your investment returns will be top class. Okay. So I'm going to stop here and ask you if you have any questions. Okay, this is my contact number and email. You're welcome to email me and ask me whatever questions you have. I will not give tips. That much I can tell you. I will not tell you buy this or buy that, but I'll tell you how you can find your own shares to invest in. Okay. So any questions and answers, please? You can put up your hand. So I have not looked at the chat, so don't put anything in the chat for now because when I'm teaching, I don't look at chat. So if you have any questions, you can put up your hand and ask me. I'll take all your questions. I know the first question is always the tough one. It's difficult to come. So let's start with the second question, please. Hello? Hello? Anybody?
Hello, sir.
Yeah, any questions, please?
Sir, I have a question regarding this Fibonacci retracements.
Okay.
So, from your experience, how effective it was to with this strategy? Like when I have using, well, the difficulty was there will be a lot of levels, and I won't be able to understand the correct level and analyze with that.
Okay.
So, can you explain a little bit about it?
Okay, sure. See, I'm not going to teach Fibonacci analysis now, but I'll tell you how I'm using it. Number one, it is very effective. Okay. It helps me to understand where the price is going at what I can expect. Okay. I get to know where I can put a target, where I can put a stop loss. For those of you who don't understand these terminologies, do not worry. Okay. So if I bought a stock, I want to know at what point I should get out, with minimal loss, that is stop loss. So in order for me to decide the stop loss, I use Fibonacci analysis. Similarly, let's say I buy Bajaj Finance today at 7,300, and it helps me to target and decide at what level I should quit to book my profit. So both stop loss and targets, we can definitely do very well, but it takes some amount of experience. You need to practice this a bit more before you know where you apply and how you see the levels. Okay, what they call the retracement levels. Okay, but it's a very effective tool. But it comes with practice, okay? Because there's a certain amount of subjectivity involved in all this. Because you see, the universe is not perfect. We have to see beauty in whatever we see in the natural universe, okay? Similarly, the stock market also is being part of the universe. It may not be exact, it may not be precise and perfect, but we need to be able to see the perfection in all its glory. Okay, so that takes some amount of practice and experience before you benefit from the application of Fibonacci retracement. Okay.
Okay, sir.
So if I may show you a screen, let me tell you. Okay. Somebody has written this. I don't know how I should remove this red line. Anyway, I don't know how it even came. So what's your name, please? Somebody.
My name is Sriman.
So
Sriman.
Okay. See, the price went from April middle at about 17,000 it went all the way up to 20,000 and it came down to about 17,500. So it went up and it retraced all the way down before it moved up again. This is called a retracement. How far can it fall? Why did it stop here and move up? Okay, all these things you can figure out by using this thing called Fibonacci analysis. There are tools available to apply this. So here is a tool that I can use to apply the Fibonacci analysis. Okay, and you see how beautiful that is. So you see here, from this top to this bottom, I draw this. Okay, now it kept coming down. Okay, it came down and it went below here. It didn't touch this and it went back up. In this particular case, it is not exactly working out. Okay, sometimes that happens. So what I'm going to do is to show you where magically it falls in place. Okay, let me. There you go. So I'm going to take from this bottom to this top and see how this level can be predicted. Okay. Look at this. So let me put it properly. So it hit the top here 100% and it kept coming down. It came closer to the 61%. And then it started going back up. When it went back up, you see it went as close to this and then came down. It couldn't go to 161%. And then it came down and went back up. You see 161, it hit and came down. This 161% or 1.61 is the what they call the golden ratio. Okay, the pi value. Okay, so this 1.61 is an important level. So these are things that you learn and you apply and see. Maybe we should reapply this to a different level and check where it is. So some of these things you need to play around with it a bit more before you become pretty good at this. Okay. So that's Fibonacci analysis. Then Elliott wave is something where Ralph Elliott said the prices move in waves like this. Okay. And he came up with two terminologies called impulse wave and the other one is, I think, corrective wave. Okay. And he said the impulse wave will move in batches of 5. And in the 5 waves, the third and the fifth wave are very important. And he said the third wave is the longest. And if you know how to identify the third wave that is coming, you will make a lot of money if the market is going up. Or if it's going down, you will save yourself a lot of trouble. So application of that Elliott wave is also now available as a software tool. So quite a few good charting platforms like this offer the tools to apply Elliott wave. Okay. Any other questions? We have a lot of time, guys. Whoever is handling your investment club, if you have any questions, I'll be happy to address.
So I had just one question.
Yes, please.
I heard it a lot from my friends that the Indian stock market does it's quite imperfect when following the technical indicators. On the US market, on the other hand, follows technical indicators beautifully. So what are your views on that and about the Indian stock market?
Okay, sure. See, while we are one of the oldest and one of the largest stock markets in the world, the liquidity or the volume is not there in most stocks. Okay, and in a stock market, we call it a perfect market because there are a lot of buyers and a lot of sellers. But unfortunately, in India, for several products, the liquidity is not there. And therefore, the application of indicators or signals or even option pricing mechanisms are not happening very well. Okay. So if you focus on the big stocks that are part of the Nifty, Nifty 50, then you're fine. Even if the Nifty 50, there are very few stocks which have enough liquidity and volume in the options market. Okay, the derivative market is 90% of the volume in a stock market. So when the derivative market is not liquid enough, it affects the normal spot market as well. Spot market meaning where the shares are bought and sold, and the options market is where the options on these stocks are bought and sold. So when the liquidity is not enough, the price is not found properly. It's important that the price is found properly. And what I mean by it is, in the market, people are saying, I want to buy at this price, I want to sell at this price. So somebody is bidding, somebody is asking. Okay. So the person who's selling is asking for a price, and someone who's buying is bidding for a price, right? So you will know whether the market price is perfect or not if the difference between the bid and the ask, what is called the spread, is very small. In most cases in India, that spread is very big. That means the price is not fully properly found. So yes, there is an issue. But in spite of all this, it's a good market. We can make good returns because all our money is here. LIC is investing. All our pension money is being invested. So there's in that sense, there's no major danger. And our market is improving every day. Our regulators are learning what to do and what not to do. So, and for people who are in India, that's the only option. You have to invest here. So don't run away from the Indian market. The Indian market is good. If you are in India and you can invest here, and the next 30 years are going to be golden years, the market is going to boom. Our stock market capitalization is going to keep on growing, which means new stocks have to come and existing stocks will grow. So there's a lot of opportunity still available, even if you're starting from tomorrow. Okay.
All right, sir. Thank you.
Sure. But this is not going to be your life. Okay. This investment in the market, don't get sucked in. Okay, I call this the ecstasy, but it shouldn't get your head and you shouldn't become so high that you're addicted to this. It's easy to get addicted. So be cautious in that. Okay.
Yes, sir, sure.
Yeah. Any other questions? Why did you all take the seminar, attend the seminar for the last 1 hour? Have I addressed all your expectations? Did you come thinking you're going to get something, and have I given you that? Let me stop the sharing and let me see if I can see all of you. That might perhaps get you all to gallery. There you go. Okay. Is Anushka here? She's the one who interacted with me to get this set up.
Yes, sir.
Oh, you are there. Okay. All right. So, do you want to start the question answer session?
For me, sir, I do not have any doubts as such.
Okay. Any comments? Was this helpful? Was this 1 hour helpful to you? All?
Yes, sir, definitely. And sir, I think it was even more helpful for the people who are not a part of student investment fund or are not regularly involved in trading or investing. So I think it would have been even more helpful for them.
Okay, wonderful. You folks have the investment club where you all put your money and somebody's investing. That's one way to get started. The other way is to do paper trading. Okay, till you get comfortable that your approach is making gains, you can do what is known as paper trading. The brokerages, some of the brokerages allow you to actually trade in the market, buy and sell in the market, but use only paper fictitious money, not real money. So vbull.com is one such, and it's not here, it's in the US, but it doesn't matter. For learning purposes, you can use vbull and learn in the US market, which, as I said, this is the universe and everything is the same. The language is the same, only the players may be different, okay? So you can use vbull.com and learn everything, practice everything using fictitious money, and then start putting your real money after you graduate. The other thing you may all want to do is to, have a sort of a investment competition, so it helps you all get into the rhythm of looking at stocks, doing fundamental analysis, deciding why you want to buy a stock, why you want to buy it at this time and why you want to sell at that time. So never ever invest in a company because you are emotionally attached, because you think, oh, Tata's great, I'm going to buy only Tata companies. Don't do that. Okay, you be objective. Tata's, well, the name is good. They may have done a lot of good things. Just to give you information, Tata Trust, they hold 65% or so of Tata Sons, which is the holding company for all the Tata companies, both publicly held and privately held, right? And 65%. So the value of that investment of Tata Trust in Tata Sons is 12 lakh crores. 12 lakh crores is the value of the asset that Tata Trust has. But you know how much are they getting income? Any guess at all? And some of you perhaps are beneficiaries of the scholarships that the trusts have given. Can you guess what is the income of Tata Trust out of 12 lakh crores of investment? The piddly 1,160 crores. Not even 1%. Okay. So Tata Trust money is not managed well by Tata Sons. And where is Tata Sons investing? They are all in the Tata companies. And they're not producing enough for their own. Okay. So don't blindly go and invest in companies thinking it will be good for you. Okay, you have to do your analysis, and all the data is now easily available. I'll show you one place where you can go get all your data about every single company right here. Oops, sorry. Let me share. And then I'll go here. Okay, so here is a software called screener.in. Screener.in is an excellent tool. It's a free. You don't need to pay, but if you pay, you get additional data. You can find anything you want to about any company. So let's say we go to Tata Motors. Okay, so immediately you get all the things about Tata Motors, their quarterly figures, the profit and loss annual figures, balance sheet annual figures, everything to know about their investors. Okay, so you look at this P&L, and you see, how are they doing? Oh, the sales seems to be growing. Okay, the net profit, seems to be okay from 31,000 to 33,000. Let's look at the balance sheet. Look at that borrowings and liabilities. 290,000 crores. 290,000 crores is the debt. And how much do they have? They have only 184,000. So should I use the B word? For all of you who learned finance, very clearly the debt is more than the asset. The liabilities are more than the asset. Okay, look at this 290,000 crores, and they have only 184. These fixed assets and all don't make sense because it's all fixed. Nothing, no money will come out of this. It's this 184,000 that they have to pay this 290,000. I will not touch Tata Motors. Okay. I know Tata Motors may have done a lot for XLRI. Okay. But it doesn't mean I'm going to put my money there, because for all purposes, look at the other liabilities, 183.5 crores, right? 183,000. The asset is 184, just a very small 1,000 crores increase. That's it. And they have done that to show that they are solvent. So now let's click on this and see current liabilities. So you look at this. They have trade payables of 84,000. Okay. Out of 183, 84,000 they need to pay outside vendors. And other liability items, I don't know what it is from here, it's 90,000. So now let's look at the asset, current assets. Trade receivables, they have only 13,000. So from the receivables, they cannot pay the vendors. Imagine 84,000 crores, they have to pay the vendors. Some of them will be small vendors, ancillaries who are sitting in Jamshedpur or Datkidi or Sakchi and making things for them. They're not getting their money immediately. Whereas they need to get only 13,000 crores. Look at the cash, they have only 29,000 crores. They do not have money, simple, they don't have cash. So how do I say this? 29,000 crores is what they have. Let's go and look at the P&L. In P&L, let's click on this expenses. Look at the employee cost. Okay, employee cost is 10% of the expenses of 37,000 crores. So about 3,800 crores they need to pay employees. Okay, and how much do they have? Cash? 29,000 crores. So they can cover the salaries. That's about it. But they don't have enough to pay the vendors. So now, you know how Jet Airways went bankrupt? How it was shut down? The straw that killed the camel is actually Jet Airways was a very large airline. 250 planes, the largest, 24,000 crores was the revenue. Okay. Now, they did not pay 1.2 lakhs rupees to a water can supplier in Bombay. Here is a water can supplier who was supplying water cans to their office in Bombay. And this fellow was not paid 1.2 lakhs. He kept asking. And they disregarded him. They didn't treat him well. So he went to the Bombay NCLT. That's the court that you go to. It's called the bankruptcy court under the Insolvency and Bankruptcy Act. He went and filed a small petition saying, I need to get 1.2 lakhs. The company is not giving. So I want the court to declare them bankrupt and appoint a receiver to liquidate the company and get me that 1.2 lakhs. All the banks were keeping quiet. The banks had given more than 8,000 crores loan. They did not do anything. This one small vendor to whom 1.2 lakhs was due by the company which has a 24,000 crore revenue. Okay. That guy went to the court. As soon as the court saw that petition, they said, yes, we are admitting that petition. As soon as that petition was admitted, the second fellow joined the petition. You know who that is? A small fleet owner. Okay. The travel cab owner who was picking up and dropping off all the flight crew from the airport to the hotel and so on. It is not the hotels which filed. Some of the top hotels had given a lot of credit to Jet Airways. Oberoi had given a lot. Chalet hotels, which is all the Marriott hotels, they've given a lot. They have not got their bills paid, but they all kept quiet. But the cab owner who was picking up and dropping off these guys, he was due about 2.5 lakhs. And how can a small cab fleet owner manage without getting paid? So he joined the water can fellow, and the two of them now filed a petition before the court in Bombay. And that's it. The whole edifice of Jet Airways fell down. Within 1 week, it crashed. Why? Because their liabilities are much more than the asset. They don't have liquid assets to pay the liquid liabilities. So you need to be clear when you buy shares, which company you are going to invest in, whether it is solid or not. Okay, and all that information is now available online, free, which is what the big institutional investors are looking at too. So for all purposes, you can be your own fund manager, do the same things which a big fund manager is doing with all sophistication and people to work. Okay, so today there is no excuse for you not to do a thorough fundamental analysis, to study the company's numbers before you decide you want to put your hard-earned money there. Okay? If Tatas cannot manage their own money, the Tata Trust money, 65% of Tata Sons, 12 lakh crores, where they're getting a measly 1,100 crores as the income, how can we put our money in Tata companies? Of course, some companies are doing well. TCS is doing well, perhaps Tata LXE or Titan or Trent or whatever. But overall, if you look at Tata companies, they're not. And the privately held companies, which are ready to go public, Air India, Big Basket. Okay. If you go to Tata Sons and you see what all divisions they are in about 6 different divisions. The biggest division, which is loss making, which has the maximum liability, is the aviation. Okay. And that is taking all the money. So be careful when you put your money in any company. Do not go by reputation. Okay, you have to check out the reputation. L&T is a big Ponzi scheme. I'll show you what I mean by that. Sorry about that. Okay, you see L&T, market cap, 476,000 crores, large company. And the chairman just put his foot in his mouth, okay? And look at their balance sheet. It's just a matter of time before L&T implodes, okay? What am I showing you here? Year after year, look at the borrowings. 125, 143, 134, 125, 120, 116, 126. Okay. Here, they move from long-term liabilities to short-term. So 125, 143, 1996. 96 became 99, while 143 became 134. So they keep switching between current liability and long-term liability. Okay, but the total liability is 267,000 crores. 267,000 now in September. In March, it was 252. So in 3 months, their total liability is increased from 250 to 270. 20,000 crores they've gone up. And they keep doing this quarter after quarter after quarter. They're borrowing to pay somebody else. They borrow more to pay the earlier fellow. This is what is called a Ponzi scheme. Okay? Now you look at this, they have other liabilities, which means they're all less than 1 year old, 141,000 crores, right? Let's look at other assets. They have cash of 96,000 crores. And the 90,000 crores is all locked up in some vague assets. Okay? So the cash is only 96, the trade receivables is 51. So 147,000 crores is what they have in order to handle these liabilities of 141. Okay. And when you click on the other liabilities, look at the trade payables, 51,000 crores. Okay. 51,000 crores is what they owe. They do not pay their vendors on time. Simple. Okay. So you might think, oh, L&T, they're nation builders. Okay. Don't go by all these cliches that people use. You have to do your analysis. Okay. Look at how the price is going up and down. That is why the smart investors know when the trouble is brewing for a company. And today you can be a smart investor because all the data is available to you free online. Look at the ROC, 13% they're making. When the interest rate in the market is 12%, corporate loan rate is 12%, they're making just 1% more. Okay, so why would we put money in Larsen & Toubro? There are much better stocks available. And all these things, you don't need to be a finance major to understand. Okay, a non-finance major can just look at about 7 or 8 different data points and decide whether that's a company I want to invest in or not. Okay, questions? Hello? Okay. if you guys don't have any questions, we can bring the meeting to a close. So who would want to do the honors of closing?
Yes, sir. I'm here.
Okay. Yeah.
All right, sir. Thank you everyone for joining us today. And a big thank you to Dr. Shankaran Raghunathan for such an engaging and insightful session. Your journey and wisdom, especially your thoughts on wealth building across life stages and the principles of smart investing, have truly inspired us all. We hope everyone here has taken away valuable lessons that will guide your financial journey and perhaps even spark new perspectives on strategic thinking. Let's carry forward the knowledge shared today and put it into practice. Once again, thank you, sir, for taking the time to connect with us and share your expertise. Wishing you all the very best on your financial and professional journeys, and have a great evening ahead. Thank you, sir.
Thank you very much. And you folks can be in touch with me. I put my contact details earlier. You can take it. And I wish you all the very best at XLRI. And if I do visit, I love to say hello to all of you. Okay? Bye then.